Everybody. Let's get started with a risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. Social media. Wanted to give a shout out to all the YouTube followers out there. We just crossed 6,000. Nice little organic following the last year and a half. Just keep doing my thing. Live sessions. Check out the Keep It Seriously Simple Trading 101 video series and leave some comments. Like, subscribe, all that good stuff. And if there's something I can help you with, let me know. Let's get into the charts. Got some broker stuff. Opening bell, we had a pretty big melt up last week with the debt ceiling, right? So everything's kind of funded through January to March of 2025. I think it's kind of the political showmanship of we'll wait to the last minute and look, we tried. We saved the country at the last minute. We were trying to fight for what we wanted, blah blah blah. So pretty standard. Market just kind of saw right through it, and here we are with a strong week, right? 2 big days to the upside. This was last week, holiday trading week. No major data. This week we've got some. I think the ISM PMI numbers come out this morning at 10 a.m. That'll be a little bit of a mover. I'm going to look at a little trade right now. Let me get logged in here to my broker platform. I'm going to look at a little bit of a breakout trade this morning on the SPY. So I'm going to take a look at some options and see if I can go after, hopefully that's the correct password. Hopefully I can go after 430 to the upside, possibly 431, or to the downside 425. So I will be watching. It's 9:35. I think the ISM comes out at 10. Yep. So here's our high impact news right here. This week we have Aussie rate decision expected to pause. We have the pound getting beat up this morning. We'll take a look at that. The CAD expected to pause with 4.5. A lot of these central banks are in the same situation. Very few are looking to raise. Most are looking to pause. The Fed rate decision, if we go to the CME Fed Watch tool for the month of June, which is next week, June 13th or 14th. 14th is the FOMC. The 13th is CPI data. So the Fed is expected to pause with a majority here. This is a high probability, 76%, that the Fed will do nothing for June 14th. We still have CPI data coming out on Tuesday. Expectation-wise, let's see if that actually prints anything. First off, let me get into trade here, take a look at some options, and hopefully I can get a fairly inexpensive call to the upside at 430. So let's go SPY right here and add a leg. Expiration would be today's the 5th, so either the 5th or the 6th. So if I bought a call at 430, that's going to cost me 45 cents. Okay, let's see if we can get up there. 45 cents to the upside. Okay, SPY, June 5th, June 6th. Let's go 430, call. See if we can get out of here for 45 cents. And now it's trading at 51, you turds. Okay, give me a second. I don't want to miss that little jump. 430 is what I'm going after. 49 cents. Got the mid, 48 cents. Come on, let's get it.
Order filled.
48. Okay, filled at 48 cents. And then on the downside, I'm going to look at a 425. Take this out to tomorrow. So just give me a moment here. If I look at a 425, I don't think the news is going to move it that much today. That'd be fairly inexpensive, 13 cents. If I go out to tomorrow, it's going to cost me a little bit more, but gives me some more time to play with this. 425, that's 36 cents. I'll take that trade for the long side. So that's June 6th, 425 put. And it's going to cost me about 36 cents. Let's go after that one as well. Okay. So 425 put 36 cents. I think we can get filled for that. $36.
Order filled.
And filled at 36. Okay. Let me get my EOD notes. Little trade going here. 6/5 expiration. Just bear with me. I'm just putting in a little trade note for today. This is a 430 long call for 48 cents debit, 5 contracts, and a 6/6 expiration for 25 long put for 36 cents debit, 5 contracts. So this one expires today. This one expires tomorrow. And looking at some levels to the upside, if we hit 430, hopefully I can see $1 plus. I'm going to try to get, if the ISM allows the price to bump up here and we hit that 430 mark, then I should be able to get close to $1. See if I can get maybe 96 cents. I'll try to get a buck out of that trade. So go to the SPY, long call, close this out for $1. That'll be a limit order for the day. All right, see if we can get limited out there. All right, sorry I was doing that in the background. Let's log into YouTube, say hi to everybody. Good morning, good morning, good morning. Nice to be back.
Brendan, you're not fat. It's the
Nice true classic advertisement. All right, Donna, good morning. First in the house. Nice to see you. Jan, good morning. Gary, good morning. Ann, good morning. FK, good morning. Happy Monday, everybody. And thanks for the 6K. We just crossed 6K over the weekend. And, I started this little YouTube channel just over a year ago, just doing some free stuff. And we're just growing naturally, so that's nice. Morning, Scott. Morning, Denise. And business as usual this week. I'm back in Utah. Snuck in about 50 hours of driving in the last 10 days. So that was a blast. But got back over the weekend, so nice to be back. Nice to be back in good old Utah. All right, so I'm taking a look at everything this morning. 428 in the SPY, 430 is the big upside. We see the resistance up here to the left-hand side. ISM's coming out at 10 a.m. CPI and Fed combos next week, Tuesday, Wednesday. Currency strength this morning. Things are pretty jumbled at the top. The euro and the Swiss are in tandem. Obviously I've got some trades on the Swiss coming this year. I'm long. Last week this was, if we go to Friday, this is a nice little breakout to the upside. Aussie Swiss trade looking really good. CAD Swiss trade looking pretty solid. Dollar Swiss trade looking pretty solid. And I think New Zealand Swiss as well doing okay. So, things are pulling back a little bit today. We see the Aussie gaining some strength this morning, starting around 8 a.m. Eastern time. The dollar, this is Aussie New Zealand on top. Euro Swiss, just below baseline, but stuck together for most of the session this morning. The JPY baseline and the pound getting softer this morning. Not sure if there's any major pound news. I didn't see anything. New Zealand bank holiday. Was there low impact news out of the Eurozone this morning or UK? Not that I see. Monday morning, all Euro news, but not really sure why the pound was getting hit hard. So a lot of low impact, but I'll skip over that. We discussed this. So the ISM numbers of PMI coming out of the U.S. this morning. Most likely this will be, well, actually, if this is staying above 50, that's pretty good. Below 50, that's a recessionary flag. Aussie and CAD rate decisions this week, which we'll certainly see some short-term movements, looking for some news trading perhaps on Tuesday, Wednesday. Both central banks are expected to pause. If we go into CPI next week, this is what I'm curious of. Do we show any U.S. CPI on Tuesday? I don't see a forecast. Year over year is what I'm interested in. So the previous print was 4.9. If this takes a big step to the downside, let's say that we print like 4. I'm not sure what the forecast is. So when this prints, maybe we forecast 4.5, and if it beats that, meaning, and when I say beat, I mean that the news is supposed to be lower, right? Usually, now prior to 2020 and 2021, the markets were always looking at like, oh, positive CPI, that's a good thing, but not anymore. Right now, we want to see a lower print. So if it estimates 4.5, I still think the actual year over year for the market to get excited would have to be 4%. So let me go to another economic calendar and see if there's a print for. If anybody has it, let me know. I'm just curious what the expectation is for year over year. If I go to, oh, get out of here. Let's go to economic calendar. Let's go next week. Here we go. Next week on Tuesday. Here we go. Okay, so this is the forecast at 4.2. This is what I was talking about right here. So previous was 4.9, forecast at 4.2. If it is 4.2 or less, okay, 4.2 or less, that would be a good sign for everything inflation being under control. Everything the Fed's been doing with the rate cycle. This will likely, the FOMC is the following day. So if it's a good print here, meaning 4.2 or less, then the Fed is most likely, which the higher probability is baked in right now, pause, right? So CPI is the 13th, FOMC is the 14th, most likely the Fed pauses, as expected. Going into July, the Fed is actually looking at a higher probability of raising rates one more time. I don't know why they would do that. At this point, I mean, we have tighter conditions. We still have bank problems. We just lifted the debt ceiling. Why would we raise rates again? Maybe that's the kind of final piece to the Fed's puzzle, which is like, look, we're serious about this inflation stuff, so let's raise one more time. Now, having said that, the market is anticipating rate cuts late in the year. I think the Fed is going to try to talk it through like we're just going to pause. The Fed will talk like they're going to pause, like they're not going to cut rates, but the market's already anticipating a rate cut of some capacity. November, December, most likely if they do raise rates in July, which obviously is subject to change, November, December, possibly one rate cut coming. And then going into 2024, plenty more. And if rate cuts, we start to see aggressive rate cutting through, let's say every quarter. Just as an example, every quarter the Fed cuts by 25 to 50 basis points. They start doing that, and all of a sudden our real interest rate compared to inflation, if inflation is sub 4 and our real rates are 4%. It's that restrictive measure that I think will kind of keep things under control. But where the market goes from there, I'm not really sure. Right, we're kind of inching up today. I think 430 is a possibility. 431 is a possibility. I'm watching some levels closely, of course, so I'm going to be watching this on my side. So I got in for 48. I'm up to 53 cents right now. Got in for 36. I'm down to 31. So I'll be watching some levels. There's a lot of volatility cracking back and forth right now at 9:46 with the ISM coming at 10 a.m. Hopefully I can see a pop up here towards 430 to 431. On the upside, we have some big levels up to 434 and 435. So if I'm looking at big levels this week on the SPY, if you want to take note of this, big levels to look at on the SPY, and it doesn't necessarily pertain to just today, but 435 on the bullish side and 425 on the bearish side. Those are going to be the big levels I'm watching this week. So it's kind of a destination. If we get to 435, that's a big accomplishment for the bulls. We get to 425, that's an accomplishment for the bears. We get to 425, we start to chew up some of these gaps, which I do think are going to get filled. This may not be, I mean, if you look left on this chart, it wouldn't be a surprise at all technically to see the market just run out of steam right here and then start dropping. Now, I'm not saying the market has to drop all the way back down. Of course, that'd be pretty ugly, right? We come all the way back down to these lows, and this little melt up since October is all for naught. Market can do whatever it needs to do, but I think this area, especially with last week's kind of post-holiday melt up, big gap right here that's still noticeable. I wouldn't be surprised if we fill that. If we don't fill it this week, I think that fill is coming next week. So I mean, we'll talk about this at the top of the hour in Equities on Demand, but I think we need to make sure that we're braced for a potential decline this week. We might take a little stab at a bear call spread, maybe the 430 by 431 if we get premiums for it. But I do think that going out to this Friday or next Friday, something that fills a 423 to 422 is pretty doable. Okay, so I'll take a look at that, but wouldn't be surprised, right? We had this big October low. We're poking up here to this August high. The melt up's been pretty crazy. The SPY's been dragged along by very few stocks, but big mega tech, right? Mega cap tech. And the market breadth is really, the first real day of market breadth, meaning that like everything is green. That was last week on Friday. It was kind of a low volatility, drifty day, but everything just kind of melted up, melted up, melted up, and everything was green. I think most sectors closed. If I go to, let's go to a sector tracker, see if I can find that here. Sector tracker, here we go. And let's go to tools and sector tracker. And I'll go the last 5 days. So this was last week, right? Pretty good week overall. You can see that reflected in the SPY and the Qs. This was the last 3 days of trading. Big bullish breakout to the upside. Major resistance at 430. But just looking at the week ahead, consumer discretionary sounds like, oh, what's that? Well, it's mainly just Meta, Google, Apple. Well, I said Meta. I'm so used to saying Facebook, but we'll just say Apple, Microsoft, Google. Big three right there that have been dragging the markets higher. Throw in Meta, throw in Nvidia, right? There's your consumer discretionary, there's your tech. Okay. So what was interesting last week is on Friday actually seeing everything else take off, like materials at 3%, like industrials at 2.64%. So my instinct last week on Friday was, is this market interested in a possible sector rotation rather than just continuing to push and melt up, this AI hype in big tech? Are we actually going to see some, money going into other sectors? Are we going to see some inflows going into other sectors? Where the case for Nvidia to go higher. I mean, I'm currently short on Nvidia. I have a 395 by 400, and I think for the next week or two, that's in pretty good shape to fill this gap. This is out far enough where I can get through the CPI data for next week Tuesday, as well as FOMC on Wednesday, and I think this gap gets filled. So, we'll talk about this again. I did take a 380 by 385. I'm not opposed to taking like a 390 by 395. The spreads are a little bit wider here. If you go out further, you're gonna have to go to like $5 and $10 spreads, and it's not offering crazy amounts of premium, which is unfortunate. We'd have to go in the money. For example, if I want to do like a 380 by 385 now, maybe I could get on a $5 spread, maybe I can get 3 to 325, which isn't bad. It reduces that risk a little bit, but hopefully the timing of this is okay. Okay, morning Don, morning Catherine, nice to see you. Okay, so let's do this. That's the SPY. Here's the Qs. Trading at 355 on the Qs. The Qs, as you look left, there's less restrictive levels, right? The Qs are kind of an open space. We could potentially melt up to 370. I think that the Qs are 12 to 13% off the all-time highs. That is quite the achievement this year if we get it. But what I'm still kind of concerned with is, and hopefully everyone understood when I said market breadth, it sounds funny. Market breadth. Okay. All I mean by that is what else is moving, because right now it's been low breadth, which means few stocks carrying the rest. And that's Apple, which I did have a chart alarm at the highs last week. That's Apple, that's Microsoft, that's Meta now, and that's Google. Those are your big four right there. And then you throw in Nvidia to go on top of that. Nvidia's, I think they eclipsed the $1 trillion market cap last week because of that crazy $90 gap to the upside, which is a 28% move. Right there, this is your explanation for why things are up. Right, this is your melt up this year. These 5 stocks have carried the entire market, and it's carrying the Qs, it's carrying the S&P, and if you go to the equal weighted, this is what I think is super interesting this year. And we talked about this a lot in the trading rooms. Equal weighted this year, this index is only up about 12 to 13%. Okay, equal weighted S&P is RSP. This is actually back to break even for the year. The year starts right here. We were positive initially. I'm trying to think where this started. Yeah, so here's where we started. We had a run up, we had a correction, we're back to break even. So basically we're flat on equal weighted S&P. We're a third of the gains on the equal weighted NASDAQ. And, it's either market breadth either catches up where every other stock starts to participate and the melt up continues and it's more, universal and everything stays green in sectors, again, it could be sector rotation here, could be everything stays green. And it just becomes like the greatest fear, the greatest FOMO year 2022 to 2023, just complete opposites. And so if it's led by tech, that's really interesting. It's I am I mean I spent a lot of time on the road last week, and I just consumed so much content, a lot of interesting perspectives out there. But what I'm not hearing is an overall bullish conviction by macro analysis. Now that doesn't mean anything. It just means that that's an opinion. Um, I think that we continue to follow price. I think that certain things that make sense to me technically is the SPY's done a pretty good job. Obviously, the SPY is not made up of 5 stocks, right? The SPY is made up of 500 stocks. So if the market breadth actually starts to incorporate more stocks, and guess what happens? We have more participation, right? We could see a pause in the big five, and then we see a catch up in the others. And maybe this is enough to justify why we're here and possibly still start continue to go higher. So I think to justify higher highs, we have to see other sectors contribute, not just mega cap tech. Okay. So if there's a pause at the top, I think that filters into everything from the market breadth perspective has been struggling, and therefore it's easy to see that technical spot where the S&P can drop, right? And this, like I said, everything was moving pretty nicely last week. The Dow had a huge day, big couple of days on the DIA, the Dow Jones as ETF, big day on the Russell as well. So it's given back some, but this big break above 180, I'm really interested if there's legs to this, right? If the Russell breaks above 80, does it stay there? Or is it simply just a little bit of a squeeze play to the upside, come back up and fill some of these supply zones, right? It finds this pocket in inefficiency, and all of a sudden it's like, well, that was nice while it lasted, and then we go back down. I mean, we're still resistance up here, support right here. I mean, the bulls, they're trying, and the effort is there. But if we stay and sustain this break, then I think the Russell and small cap start heading higher. If all of a sudden by today, for example, if we close with a big red candle on the day, I think that's a fake out, and we probably get choppier once again, or possibly even have some traction to the downside. Okay, so I'm still, I mean, as you can possibly tell, it's like I'm pretty neutral. I don't have the conviction to the upside with the big melt up. I'm participating. I mean, I have FANG stocks, right? I mean, Mang stocks, I guess now with Meta. If you want to start with Meta or Microsoft up front, I've had those stocks for a long time, so that's helping. But I'm certainly not 100% in Nvidia. I'm not 100% in Microsoft or 100% in the Qs. I mean, I've got a lot of positions here in my portfolio. So anyway, diversification is important, and it just, I feel like I'm a lousy trader if like the Qs are up 30% and my fund is not. I'm up 10%, 11%. Granted, I have much less risk on the table than if we see a big correction in the indices, and I'm certainly positioned for the downside to make money. But I don't know. It's one of those years, right? Where so few things are moving, but it's so big of the movement, it just makes you feel like, am I doing something wrong? So it just feels like you're kind of chasing the AI stuff or chasing the hype, and the markets can certainly remain irrational and way more excited about that way longer than you think. So, um, like I said, consumed a lot of content. I didn't hear a single person that I follow and respect out there in the industry that's super believing this rally. So, and again, the hardest part is to time it, right? If you want to say that the S&P is going to go down, don't put a timestamp on it. I mean, look, the reality is this: we could see the S&P either one, fall from here, or two, come all the way up to the historical highs again and then fall from here, and we could be in a range for maybe years to come. But within that range, there's a 30 to 40% move there and a 30 to 40% move there. That's very possible. I don't know, and neither do you. So we figure out how to trade it. And fortunately, with trading some currencies, trading some options, having some positions we like, we find a way to do okay by it. Okay. All right. Let's talk dollar. I'm going to switch over here in just a few minutes to equities on demand. Dollar's at 104. Back up for a couple days of trading on the DXY. I'm still looking at dollar to go up to 105, 106. Whether this leads to risk-off trading or not, it hasn't really been the case. We've seen a melt up in stocks and the indices. We've seen a push higher in the dollar. I still think the dollar looks good to the upside. That being said, positions that are probably going to do well with the dollar, the Aussies made a pretty fierce comeback. But if we see, let me use a straight line here. If we see dollar strength, I would like to see if the Aussie dollar can turn back down and go lower, put a stop loss above, and see if we can score a point for these bears. If this is high to low lower high to lower low, I'm looking for a push down. Okay, now there's two ways this plays out. One is, this was enough of a pullback that we start to see this turn south, okay? Or because we established a shallow retracement, this is high to low, this is 1, 2, 3, and maybe we have something like this forming. Another downward channel to the, the bear side for now. But, I can get into the nuances of every individual chart, but overall, just kind of the bigger index picture is the dollar. If I'm watching the dollar, I do expect the DXY to continue to slide up towards 105, 105.50, topping out right around 106. If it gets higher and melts up towards this 106 to 107 handle, that's okay. I'll still be protecting profits on the dollar overall, right? But I'm still looking for dollar index to rally. U.S. oil, as of last week, we had a great start to the day, and then there's some OPEC news over the weekend. Let's see here. Energy stocks climb pre-bell Monday. Anything on OPEC this week? I didn't see much on it. Let me go to financialjuice.com. Let's go to OPEC for a second. See if I can get a summary on OPEC. Preemptive move, brain pain, OPEC cuts, $95 despite cautious market reaction. That's Brent crude. Where's Brent crude trading at right now? UK oil is trading at 77. Wow, so 95 price target on Brent. That's way up there. I was going to say that's probably about that yearly pivot, which means our U.S. oil is, I think that's in the $90 to $95 zone as well. So it sounds like if OPEC gets what it wants, OPEC wants higher oil prices, naturally. I still think this is a very noisy zone right now for oil. But if we get a big bump to the upside, it's going to be interesting how the Fed kind of tackles the whole inflation thing because, we know the difference between CPI and core CPI, right? Core CPI is what excludes food and excludes energy. I mean, energy and food were two of the reasons we had so much inflation and so many worries going into the last couple of years. All right, ISM just came out. It's 10 o'clock. Let's see what the market gets. And news-wise comes out. So forecast 52 came out 50.3. So that was a miss on the US ISM PMI side. Let's see, forecast 0.8 came in 0.4. So two softer prints on the ISM PMI this morning. We'll see what happens there. JPY getting stronger the last couple of minutes. That's a pretty big jump in JPY strength. Might have some risk-off flows. But again, watching 430 and 431 to the upside and watching 425. Yeah, that's my downside target, but I'm going to take that out to tomorrow. So see what I can get this week. 429 to 430 today. See if there's a pop to the upside or we just start to push lower and ride that out. So let's see, that was for 30 some cents there. Let's go after the 425. See if I can close this down. Yeah, baby, we're getting a pop to the upside. Let's go 430. 56 cents, 57 cents, 60 cents. Okay, I'm just watching my call side right now. I got in for 48. I'm up 12 cents. I'm going to see if I can just peel it off for 12 right now and just maybe take a small win. Let's see here. Get up there, you turd. 430 to 431. Let's get a little push on that. All right, so I'll be watching that short term. Oil, big OPEC targets to the upside. I was just curious how it all went. IEA warns of higher oil prices after OPEC Plus announcement, which was what, by the way? I know there's some big expectations on Saudi. Announced it will extend its production cuts into 2024. Saudi Arabia reduces production by 1 million barrels per day in July. Okay, so we got Saudi oil cuts. Oil prices are likely to move higher. Experience an imbalance in oil market in the second half of the year. This move will worsen supply-demand gap. All right. So levels to watch, gap higher, but guess what? It's the same thing we saw earlier. Who remembers the last time we had OPEC news? Right there, right? We had OPEC news right there. We came back to fill the gap. We nearly, what we did, what am I talking about? I circled the wrong gap. That was stupid right there. There's OPEC news, right? Big gap to the upside. And, I was watching this yearly pivot. What did we do? We came all the way back down to the same low. So OPEC news, there's another gap. So I still think we just build right here. Lots chop, right? But I do think that, demand levels, support levels are pretty strong here between 62 and 65. If we get a squeeze on oil, great. drive materials higher. Inflation becomes a thing, and we'll see how the Fed and other central banks handle it if it becomes a problem. So, all right, I just realized it's 10:03, 10:04. I'm going to switch gears and jump into the trading room. So, like I said, big thank you to everybody helping me get to 6,000 followers. Let's go road to 10,000. Hopefully, we get there sooner than later. So, I appreciate everyone subscribing, liking, coming in live to these sessions on Mondays and Fridays for the Pulver Report, checking out the videos in the Trading 101 series. And thanks for being here. I'll be back on Friday, business usual this week in the trading rooms, Monday through Friday, stocks and options for equities on demand, Tuesday, Wednesday, Thursday for flex, and let's have a good trading week. Okay. All right, buddy. I will see you soon, and we'll be back on Friday to wrap up the week and talk then. All right, thanks. Bye-bye.